Hi there! If you're new to my sessions, here are the key takeaways you can expect after the session. I will cover the Wyckoff stages both in the weekly and daily time frame for Ripple, and then also the key price levels where Ripple will find support or resistance, and finally any breakout timing that the charts are telling us. So let's start with the weekly chart. Here we're looking at Ripple with a week of slightly upwards compared to where we opened last week, not the high point. So where we are now is not even like the top of last week. So as of this moment, you see the price movements or actions are still within this downward channel box, this blue box, going down to the right hand side. And this week, I'll say the significance is that the price reclimbed to above the key level, the green key level of $2.45. There's not much of a breakout event that's significant. The only one is the one here where the center line crosses the green key level. But even if breakout happens over there, it's still within this blue downward channel box. So that's why it's not a breakout timing that is of something that's going to change the trend. So in terms of Wyckoff, we previously talked about there is still a higher chance for the price to come down to the yellow key level of 2.05, while a smaller chance heading back towards the purple key level of 3.38. If we turn on the Bollinger Band corner squeeze, currently Ripple, to me, is already within a squeeze zone. So if we look at here, the week of October 6th, the purple lines are basically within the orange. And the bottom edge continue to move inside, while the top is coming down as well, but not as quick as the rate of the orange. So technically speaking, because they're close enough and one side is already in, I consider that a squeeze is happening. Meaning, when the squeeze force is finally released, we'll see bigger price swings. If you are new to this indicator, look at what happened right there when the squeeze happened, build up over there. That's why I say don't just look at what the indicator is showing you, like the shades at the back, because that's pure calculation. But if we look at the lines with our own eyes, we see what's happening, right? The purple is or was within the orange for a long period, and the top line was close enough, and then eventually that breakout happened, and that's the bigger price swings, much like what happened in December 2024. So there are multiple examples, sometimes swinging towards the downside first, sometimes swinging up just to come down subsequently. So this is the use of the Bollinger Band corner squeeze. It's going to tell us potential bigger price swing is coming, not that it's going to tell us which side the swing is going to happen first. So we've covered the Wyckoff stages in the weekly, knowing that the sign of weakness is still of higher possibility. We have touched on the Bollinger Band corner squeeze, and also these key levels that's hovering around here. It's time to get to the daily and check whether there are any breakout timings. So we talk about this potential accumulation cycle that may have started. These yellow tags are the ones that supporting that scenario. Not that that's an absolute case, but it's a possibility that an accumulation is going on. But if we look what happened over there, across mid-August all the way till October 9th, that was just a horizontal trading range. So we might as well be going through that as well, not necessarily an accumulation. That's why I have a question mark here. It's really questionable because it's near the end of the distribution for daily chart. Just that the price gets too close to the selling climax we had back in early June. That's why I say, would this, especially the thing happened on last Friday, would that be a selling climax? Like an accumulation cycle at a quite high level around that green key level of $2.45. If not, if the yellow scenario isn't true, what's going to happen if the price is going to go further up? It will come to the ceiling of this downward trend that started sometime in late July, and that would rebound and come back to test the light blue key level first, and then eventually the green key level again. So that's assuming the price continues to go up from this point onwards. The volume itself doesn't tell much because it's staying pretty average since end of July over here. Okay, let's enlarge this a little. I'm always thinking about people watching on mobile device that the charts may not be large enough for you. Okay, here, if it got rejected by the light blue key level, the horizontal line, then it probably is going to continue with this trend because it's still comfortably staying within this downward channel box. Remember, I shared a lot of times, but if you're new to my session, the channel box, how the price moves between or within the channel box is basically it bounces off from the two edges, and also sometimes the center line, the dashed line in the middle. So you see price bouncing off the edges, the solid edges, and currently these two recent peaks, one on Monday the 13th and the other the next Monday 20th, both were rejected by the center line. Today is the first time over the past week or two that the price successfully climbed above the center line, but there's still 8 hours before today's candles finish. Then we will know whether it's really closing above this line and start to trade for a while on the top edge, top half, let's say, of this channel box, because it can continue sideways until it reaches the point where there is like a dual resistance, the key level of $2.7, okay, and also the ceiling of this downward channel. Then it may find rejection and eventually come back to test the green, which it showed that the green isn't like as strong a support as it should be, and then maybe come back down to the lower half of the channel and test this yellow key level of 2.05. So that's where the like the selling climax was back in early June. And also in the beginning I mentioned this sign of weakness level for the weekly time frame. Okay, so that's the potential events or the track that the price may happen. Breakout timing itself, if the price successfully continue with this uptrend passes the 2.70, it will come to somewhere within this triangle built by the ceiling of this downward channel box and also the 2.7 light blue key level itself. And that date is pointing to somewhere around the third week of November, around November 20th. So if the price really comes into this triangle and trade narrow range for the subsequent 2 to 3 weeks, eventually there is a breakout opportunity. To the downside, nothing changed. It still remained within this downward channel. But to the upside, that's another story, because it can go back to challenge the blue key level of $3.05, which was the levels of the previous LPSYs back in beginning of this month, middle of September, and also end of August. Okay, so that's also a step towards regaining the purple key level of $3.38. That's very key if it really breaks outside of this downward channel box. So keep a close eye on this uptrend that started 2 days ago on Thursday. See how far it's going, whether it's going to be rejected by the ceiling of this downward channel. If it does, that means the downtrend continues. If it doesn't, if it breaks outside, then this trend is probably over and we have to look for another new trend. And potentially some sideways, longer sideways movement is going to continue instead of downwards. So that's all for Ripple today. Not as events are not as imminent as Bitcoin or Ethereum. Not that it's going to be unaffected if Ethereum or Bitcoin are going really to break out in the next 10 days. You can check those sessions that I've just covered. However, for Ripple itself, even if it really climbs for another 8% to 9%, it's still within this downward channel. So let's see what's going to happen for Ripple for the next roughly 3 to 4 weeks, whether the price is really going to climb into this triangle and eventually break outside of this downward channel box. See you in the next session.